Good afternoon, everyone. It's Monday, the 4th of September. My name is Thilan Wickramasinghe, the head of research for Maybank Singapore. And thank you so much for joining our Markets Monday show today. We have a lot to cover on our show, so, let's not waste too much time. On the show, I want to highlight three things we are going to cover. We are going to talk about three conviction buys that we have and why we think these conviction buys are even bigger buys today. We are also going to talk about a very interesting report our macro team has produced on the green manufacturing revolution in Southeast Asia. This is going to have some big implications on your sector picks as well as your stock picks going into the next few years. And also, we're going to talk a little bit about the technical analysis, particularly on the REIT sector, and whether it's the right time to buy or whether we still need to be quite selective. Now, before we do all that, let's look at market moves. Last week, generally quite positive in the US. We saw, overall the Goldilocks sort of scenario taking a lot more prominence. Earnings in the US are still being nudged up. Rates conversation is all about peaking in the US. We also had China stimulus talk as well. So all of that combined, we have seen the Dow Jones up about 0.3%, the S&P up about 0.2%. As well as looking into China, the Chinese composite up about 0.4%. Southeast Asia as well was generally in the green, with Singapore up about 0.4%, KLCI up about 0.8%, especially after a lot of the conversations around the new sort of economic targets coming from Malaysia. The only market that didn't hold up particularly well was Thailand. The set was down about 0.3%, and we think part of this is really profit taking after the elections. Now let's dive straight into our stocks at this stage. As I said, we've got three big conviction buys that we started this year with. We got Food Empire, we have Aztec, we had Singtel. Now, one of the things that we as analysts do is go on the road and meet the companies that we cover and actually see whether they're actually doing what they're saying they're doing. And we've had a very busy week last week, last 1.5 weeks or so, where our analysts have really been hitting the road and checking out what some of these companies are doing. So the first stop for Jarek was Food Empire. If you recall, he wrote an Opportunity Plus piece on this a few months back, and he actually visited their Vietnam operations. And one of the key things that he came away with was that he was very, very positive on his buy call after this Food Empire visit. Now, why is that? He thinks that the sales overall for the company are on track to grow at around 13 to 15% this year, so hitting those targets quite easily. He also is seeing that a lot of the new products that they're launching in Vietnam has good traction. They've got a new cafe for gold product that is coming out. It's a more high-end 3-in-1 ready-to-mix, ready-to-drink coffee product. And there's also a 3-in-1 bubble tea brand called Hillway that they have launched there as well. So I think some of these products are starting to gain some very good traction in Vietnam. So he thinks that Vietnam can be the next leg of growth for this company. Now, as you know, one of their biggest markets is Russia as well as Ukraine, and they've actually performed pretty well despite the war situation there. And one of the things that we are starting to see the company saying is that they're looking to increase prices, particularly as a way of offsetting the ruble decline. So prices are set to increase around 7 to 15% starting this month. Now, this will not show very quickly on earnings, but by the first quarter of next year, you should start to see that coming through on the margin side as well. So you have a new market or a growing market in Vietnam, where you're going to see the delta in volumes growing, and at the same time, you have potential for higher margins also coming through. So Food Empire, trading at just 8 times PE, close to 5% dividend yield, so we are reiterating our buy call. Another stock that Jarek likes is Aztec. We would have had him on the show today, but he's still on the road and meeting more companies, so we'll bring more updates on that. But now on Aztec, he went and visited the Dongguan facility in China, and came away again a lot more positive on the prospects for this company. Now, the Dongguan facility in China for Aztec was one of the few facilities that are actually running at about 75% utilization rate. When a lot of factories surrounding that factory has actually closed or reduced capacity. Now, this actually shows a first-hand impact of China's trade war with the US, and also how a lot of supply chains are moving away from China into some of the neighboring countries, particularly to Southeast Asia. And we'll talk a little bit about that a bit later on. Now, particularly when we look at Aztec, they are continuing to benefit. The reason why their utilization rates are so high is that they're continuing to benefit from their main customer, who's continuing to give them a lot of new orders, and that visibility is there going into next year as well. At the same time, there's the R&D division is actually coming up with a lot of new products, and a lot of these new products will start to hit the market as under their own brand, but also as white label brands as well. So some of these include new security cameras, as well as new IoT products as well. So we think as a stock, it's underappreciated. The dividend yield on this stock is fantastic, 8.5%. So we are keeping our buy recommendation on this stock. Now, moving on to another conviction stock, Singtel. Again, our analysts have been busy. Kelvin, who is online with us today, he went and sat through their investor day last week, and he actually came back quite positive again on Singtel. Now, if you think about Singtel, this is a stock that is very much driven by return on invested capital. The stock price has a very strong correlation with the return on invested capital. So let me bring Kelvin here at this stage. And Kelvin, tell me, you wrote a report and you said you're a lot more positive on this stock after hearing management during the investor day. Why? What is driving this?
Um, Hi, Dylan. Thank you. So, we intended the investor day. I think the senior management share key goals for their business for the next 3 years. As you have mentioned, I think a key re-rating catalyst for Singtel share price is ROIC. So we have seen, the Singtel share price has demonstrated a positive correlation of 89% with its ROIC, which means that, when the ROIC performs better, the share price inches up. So in order to further boost its ROIC, management has reiterated its ROIC target of the low double digit by FY26. So currently we see as of June, it's at 8%. Singtel will continue to boost its ROIC with four main approach. So firstly, it aims to increase its cost synergies at the operating and capital expenditure level, particularly from recent consolidation of its enterprise and consumer business in both Singtel and Optus. Uh, so secondly, it will reduce its capital intensity further via better management of the 5G rollout, which would taper its D&A expenses. And thirdly, we see that the group will further pare down its stake in associates to release capital. And lastly, you're right on Bharti's ARPU improvement in India to boost Singtel's bottom line as well. To drive EBITDA growth, Singtel will, double down its effort to grow its currently its growth engines, which is the NCS and the regional data center, because management see longer term tailwinds from enterprise digitalization trends, and its booking momentum is quickly grown from its expansion initiative as well. For its data center, Singtel's main focus is to grow its capacity, so it will grow an additional of 155 megawatts by FY26 with potential monetization down the road. So there's also an upside to its ordinary dividend with 2 billion of excess cash yet to be returned. So we are quite positive on Singtel on those front. Yeah.
Thanks, Kelvin. So $2 billion of excess cash that they're carrying on their balance sheet.
Yeah.
That's quite interesting. So that can actually add to their dividend yield going forward. Now, one of the things that I've observed when, especially when a lot of these GLCs, and this GLC sort of transformation, GLC restructuring, has really kind of taken off since the 2020s with COVID, with Semcorp and Keppel, and we've seen how those share prices have done as these companies have undertaken restructuring. So I think Singtel is still very much in the sort of early stages of that. So I think there is potential for more upside there.
Yeah.
Thanks, Kelvin. Thanks for joining us.
Thank you.
Now, I want to shift our focus to the macroeconomic side, and if you download our latest report, our latest weekly report, and if you scan the QR code at the beginning of this talk, you will actually be able to download the report directly. There's a QR code that's appearing right now. Now, what I really found interesting with this macro report is that how it kind of explains ASEAN and Southeast Asia is at the cusp of this green manufacturing renaissance. And I think this is going to have massive stock implications across all the markets that we look at, and across multiple value chains. One of the key value chains I think that there is a lot of opportunity is the electric vehicle value chain. And this will benefit Singapore, Malaysia, Thailand, Indonesia. If you take the EVs, particularly in Singapore, that will benefit names like NEO and Nanofilm, Yinsen in Malaysia, a lot of the metal and mining stocks in Indonesia, as well as some of the manufacturing stocks in Thailand. We have with us Erica Tay, who is a director of macro research with MIBG, and she's going to. So, Erica, thanks so much for joining this show. And I think you're great. And I just want to ask you, Erica, what are the key sort of takeaways from this report? Why is ASEAN at this juncture today?
Yes, ASEAN is seeing this green manufacturing renaissance, and it's quite amazing. So it's become some sort of a darling of multinational companies that are looking to set up advanced manufacturing plants somewhere in the world. And because of this, ASEAN's share of the world's FDI, foreign direct investment, has tripled since 2016, right, from 6% to 17% now. So two of the structural forces are driving this. So firstly is geopolitics. More companies, more multinational companies are looking to expand in locations that are less vulnerable to US-China trade tensions. And ASEAN has what it takes. And secondly, the green transition. So more and more populations in Asia are switching over to electric vehicles, and more countries are switching over to renewable energy sources. So we see, especially in the past 1 year, a huge flood of MNCs from China, Japan, Korea, and Germany setting up shop in the likes of Indonesia, Vietnam, Malaysia, and Thailand, four countries which we call the ASEAN Manufacturing Four. And they're entering fields such as EV battery manufacturing, as well as EVs production itself, as well as solar and wind power generation. So we're very hopeful of a green manufacturing boom for this region.
Thanks, Erica. So I think it's very, very exciting, and I think the stop implications are going to be deep, and we will definitely be doing a lot more work on this, on our stock recommendations as well. But I think some of the key sort of beneficiaries, I think straight off the bat, would be names like NEO and as well as, let me see my notes, Nanofilm in Singapore, Yinsen in Malaysia, as well as some of the manufacturing names in Thailand. So, stay dialed in, and we will give you more ideas on how to play this theme. So thank you, Erica, for joining us. I know we are running tight on time, but I want to kind of bring in our technical analysis at this stage. Let's just wait for the slides to come on screen there. So the first one, Nick is quite positive on the STI index. He thinks that it'll rebound from the double bottom that it has formed now. But he's not as positive on the iEdge S-REITs index. I think we've seen a little bit of a rebound on the index, and I think partly this is because you're starting to see this narrative of rates peaking, becoming more and more prominent. But I think it's still not the right time to buy the entire sector. So I think you still need to be a lot more selective when looking at the S-REIT sector. So one stock though that we liked and we've recently written about is Fraser Centrepoint Trust. Krishna likes this stock, particularly after their transaction where they unloaded their Changi City Point assets. So what he's saying is, as they shrink their balance sheet or right sizes their balance sheet, that gives them a significant amount of firepower to actually focus on areas where they want to grow. So this is a stock that we like at this stage. Now, apart from that, we've got a few events and announcements that are coming on next week. We have the PMI readings for Singapore coming out on the 5th of September, and the FX reserves coming out on the 7th of September. We also have the Nordex numbers, which we are watching very, very closely to see how the global economy is faring, but also gives us an indication of Singapore's overall GDP growth going into this year and next year. The Nordex numbers coming out on the 15th of September, as well as the CPI numbers, the inflation numbers coming out on the 22nd of September. Now, apart from that, we have some very interesting events that are happening. One of the ones that I really want to bring your attention to is on the 11th of September, which is our Comfort Delgro corporate event. We will have the senior management of Comfort Delgro presenting on the stock, the prospects of where Comfort Delgro is going. I know a lot of investors have sold out of this stock. This stock has been a constant disappointment, despite the sort of reopening narrative that has seen names like Singapore Airlines doing much better. But we think that this is the right time to look at Comfort Delgro. We think that there is an inflection point in terms of operational turnaround that is coming through. So do speak to your salesperson for an invitation to the investor night on the 11th of September. Now with that, we are out of time again. So thank you so much for joining us today, this week. as you have been doing every week. Please do provide your valuable feedback by scanning this QR code so we know how we can improve. And if you have questions and things like that, please do let us know ahead of the show or through your salesperson, or you're free to ask them through this show as well. Thank you very much for joining, and have a profitable week.